Man, have you taken a look at the market lately? It's well, it's pretty hard to miss all that red, right?
Yeah, it's
I mean, the Dow is down, the S&P 500, even the Nasdaq.
Yeah.
It's kind of making everyone wonder what, if anything, is actually, holding steady.
Yeah, exactly.
So that is exactly what we're going to be diving into today.
Okay.
So while tons of the market is just getting completely shaken up,
Right.
well, we found this really fascinating story about a company that's doing really well, even hit an all-time high in March. Can you believe that?
Wow.
And this company, I bet you can't guess who it is.
Okay.
It's McDonald's.
McDonald's.
Ticker symbol MCD.
Interesting. Okay.
So we're going to figure out today why in the world McDonald's is standing so strong while everything else is kind of,
Right.
falling apart.
Crumbling.
Yeah, crumbling around it.
Yeah.
And to do this, we're going to be looking at a piece from The Motley Fool.
Okay.
And basically, we just want to see what we can learn from McDonald's, see if there are any, broader market lessons here.
Right. And maybe even some investment ideas that,
Yeah.
we can maybe get out of this.
For sure.
So,
the Motley Fool article, it kind of kicks things off by talking about how McDonald's has this business model that's strangely, really resilient
okay.
to trade tensions.
Mm.
Obviously, nobody's completely immune
Yeah.
to global stuff,
Right. Right.
But their setup, it seems like it just gives them this extra layer of protection.
Interesting.
Yeah.
So is this because they're just massive?
That's definitely part of it.
Okay.
I mean, think about it, over 38,000 locations.
Wow.
In 100 countries.
That's crazy.
Yeah. And here's the thing. Something like 93% of those are run by independent franchise owners.
So it's not even like McDonald's corporate is running all those. They're just.
Yeah, exactly.
Oh.
That franchise model is the secret sauce here.
Ah,
It's this really smart system where local business owners, they put up their own money to, run a McDonald's restaurant.
Right.
Right.
And what do they get in return? They get to use that crazy strong McDonald's brand.
Of course.
And they also get these proven systems that McDonald's has built up.
Yeah.
For running things smoothly.
Yeah, it makes sense.
So they pay rent and royalties to McDonald's corporate.
Okay.
And then whatever's left over from their sales.
They keep eating.
Yeah.
I mean, it sounds like a pretty good deal, right?
Oh, yeah. It's designed to be this win-win. Right.
Totally.
McDonald's corporate, they get this steady income.
Yeah.
Without all the headaches of actually managing every single location.
Right.
It's they're kind of, the puppet master behind the scenes.
Yeah, they're kind of just raking it in. Right?
Yeah, they're more about, keeping the brand strong and making sure the whole system's running smoothly.
Okay, and that's where their operating margin comes in, right?
Exactly. So we're talking 45.7%.
Whoa.
That's insane.
That's a tech company number or something.
I know, right?
Yeah.
Usually you see margins like that with software companies, not burger joints.
Definitely not burger joints.
No.
So the article compares that to Chipotle, who's at 17.6%.
Right.
And Starbucks, they're at 13.2%.
Yeah, so you can really see the difference that ownership structure makes.
Oh, for sure.
Chipotle, they mostly own their stores.
Okay.
And even though Starbucks does some licensing stuff,
Mm-hmm.
they still run a bunch of their own locations.
Gotcha.
So that means they're way more hands-on, which means more costs and more risk.
Yeah, totally.
If people suddenly stop buying lattes, Starbucks feels that pain directly.
Right, exactly.
But McDonald's, they're kind of insulated from that.
Makes sense.
Their corporate margins are so high because they've basically outsourced all those day-to-day expenses.
To their franchisees.
Exactly.
Interesting.
And that's why it's almost their main business isn't even really just selling burgers and fries anymore.
It's more managing the brand.
Yeah.
And keeping those franchisees happy.
Exactly. If those franchisees are making money,
yeah,
they're going to keep paying rent. They're going to keep paying royalties.
Right.
And they're going to want to open more McDonald's.
Yeah. Okay. So it's kind of brilliant, actually.
Right.
Yeah.
It's this self-sustaining ecosystem.
Totally. And that's probably why, they're doing so well when everyone else is kind of struggling.
Yeah, totally. Yeah, people might cut back on other stuff when things get tough.
Right.
It's everyone's still got to eat.
It's true.
And McDonald's is the king of affordable, convenient food.
Okay, but so the franchise model, that's one piece of the puzzle.
Yeah.
But the article also mentions some other things McDonald's has been doing that have helped them out, like their loyalty program.
Oh, yeah. That's been huge for them.
So what's the deal with that? How successful has it been?
Super successful.
Really?
Yeah. In 2024, their sales to loyalty members were a whopping 30% higher than the year before. Yeah, and get this, loyalty members made up almost 23% to be exact, of their total sales worldwide.
So basically like a quarter of all their business is coming from people who are like super fans.
Exactly. People who are hooked on the rewards and keep coming back for more.
Okay, and how does that all connect to their, what is it, the 4Ds strategy?
Yes. The 4Ds, digital, delivery, drive-through, and restaurant development.
Okay, so that's like all about convenience, right?
Absolutely. It's about making it as easy as humanly possible for people to get their McDonald's fix.
However they want it.
Exactly. Whether it's through their app, ordering delivery, or just zipping through the drive-thru.
So if you're like busy
Totally.
or you're trying to save money, McDonald's is like the perfect solution.
Right. It's like they've figured out how to be the ultimate comfort food.
But also like a super smart business.
Oh, absolutely. And think about it. This all plays into their ability to, kind of ride out those economic storms.
Okay, how so?
Well, if they're making things super convenient,
Yeah.
people are more willing to, maybe pay a little bit more.
Interesting.
If you feel like you're getting a good deal,
Right.
and it's like super easy to fit into your life,
Yeah.
you're not going to be as upset about a small price increase.
That's a really good point.
Plus, don't forget, when the economy gets shaky, people start looking for cheaper places to eat.
Right, like trading down from fancy restaurants.
Exactly. And McDonald's is like right there waiting.
Yeah.
With their value menu and all that.
And the crazy thing is, this isn't just like a recent thing.
No, not at all.
The article talks about how they've been performing well for like a decade.
At least. Like, remember back in 2018 when everyone was freaking out about trade wars?
Oh, yeah.
McDonald's just kept chugging along.
And then there was COVID, which was like...
Yeah, that was insane. The whole world shut down.
I know.
But McDonald's, they were still there.
Yeah.
Slinging burgers.
And now with inflation and everything.
I know. It's crazy.
It's like nothing seems to faze them.
Right. It's like their business model is this like magical force field.
So it's not just the franchise model. It's like everything they do.
It's like all these pieces working together.
Yeah.
The franchises, the focus on value, the loyalty program, the tech stuff, all of it.
Okay, so they're weathering the storm pretty well.
Oh, yeah.
But what about for investors?
Well, that's where things get even more interesting.
Okay, tell me more.
So the article talks about how McDonald's is this like passive income machine.
What does that mean?
Basically, it means they're really good at generating cash.
Okay.
And then they use that cash to pay dividends to their shareholders.
Okay.
And they also buy back their own stock.
Right.
Which can boost the value of the remaining shares.
Okay, got it.
And the reason they can do all this is because of that, capital light franchise model.
Right, because they don't have all those overhead costs.
Exactly. So they have this really high profit margin, and that gives them a lot of flexibility with what they do with their earnings.
Gotcha.
So their dividend payout ratio is about 59%.
Okay, and what does that mean exactly?
Basically, it means that they're paying out 59% of their profits as dividends.
Okay.
Which is a pretty healthy chunk.
Wow, so they're sharing a lot of their profits with their shareholders.
Yeah, and the best part is it's sustainable.
So they can keep doing it?
Exactly. And get this. They've increased their dividend for like 48 years straight.
48 years?
Yeah. That's almost unheard of.
That's crazy.
It shows you how stable and predictable their cash flow is.
Yeah, for sure.
And it's not just about the dividends.
What else?
They've also been buying back their own stock like crazy over the past decade.
Really?
Yeah, they've reduced their share count by almost a quarter.
Wow.
So you've got these growing dividends and fewer shares outstanding.
Yeah.
Which means each share becomes more valuable.
Okay, so what's the dividend yield right now?
It's sitting around 2.4%.
Okay, so maybe not the highest out there, but...
Yeah, but you got to consider the consistency.
Right.
And the growth potential.
Especially when everything else is so uncertain.
Exactly. It's like this island of stability in a sea of market chaos.
Totally.
And that's kind of how the Motley Fool sees it, too.
Oh, yeah.
Yeah, they basically say that McDonald's is like a safe haven for investors.
Interesting.
If you're looking for steady returns and you don't want to gamble too much,
Uh-huh.
McDonald's might be your answer.
So it's all about that cash flow, right?
Yeah, that predictable, reliable cash flow from all those franchises.
Yep.
It's like the bedrock of everything they do.
It makes their dividends super reliable.
Yeah.
And it gives them the firepower to buy back stock.
Exactly.
It's kind of like no matter what happens in the world,
Right.
McDonald's is going to be just fine.
It's like they've cracked the code.
Yeah, maybe they have.
And that's why they're worth considering if you're looking for a solid, dependable investment.
Okay, so let's just do a quick recap. We've basically learned that McDonald's is this crazy resilient business thanks to their franchise model,
Yep.
their focus on giving customers a good deal,
For sure.
and all their investments in making things like super easy and convenient.
Right. Digital delivery, all that.
Yeah, exactly. And because of all of that, they can generate this like crazy steady stream of cash,
Yep.
which they use to pay dividends and buy back stock.
Making their investors happy.
Yeah, and that makes them a really interesting case study, right?
Sure.
It's like they're showing everyone how to thrive even when the market's going bananas.
It's like a masterclass in navigating uncertainty.
Totally. So
What?
I want to leave you with this thought.
Okay.
We've been talking about McDonald's.
Yeah.
But what about other businesses that are kind of like under the radar?
Like what?
Like businesses that might not be as flashy or exciting,
Right.
but that have those same fundamental strengths.
Okay, yeah.
You know, those strong business models that can withstand any kind of economic storm.
Like what metrics should we be looking at?
Exactly. Like, what are the signs that a business is built to last?
That's a great question.
It's not always about, like, the fastest growth or the latest trends.
No, for sure.
Sometimes it's about those businesses that are kind of boring,
Right.
but that are providing essential services.
Yeah, things that people will always need.
Exactly. So I want you to think about that.
Okay.
What are those under-the-radar businesses that might actually be the most resilient?
It's like a treasure hunt.
It is. It's like finding those hidden gems in the market.
Like that.
Yeah, so keep your eyes peeled
Will do.
because you never know where you'll find the next McDonald's.
That's true.
All right, that's all for today.
Thanks for having me.
Thanks for joining us.
It was fun.
Yeah, it was great.
See ya.
See you later.